The bank said no. 2 weeks left to close, appraisal in hand, and it came back with more than enough value. Everything was perfect, but the bank declines the loan in the 11th hour on an as-is sale where the borrower had a significant deposit at risk. The borrower comes to us, and we didn't flinch here at Asset-Based Lending. We closed the loan in 8 days. And I'll explain exactly why the borrower failed to close and decline the loan in the 11th hour and how we were able to get it done and didn't even flinch. So everyone knows banks are rigid, right? They have a lot of red tape. And one of the key reasons why the private lending world has been thriving for the last 15 years or so is that we don't have to deal with all that regulation. And we can really adapt our loan to meet the needs of real estate investors. So when situations arise during the closing process that the borrower didn't foresee, that we didn't foresee, we're able to pivot and make logical decisions as we did in this case. So let's paint the picture. We got 2 weeks left to go on a closing. The borrower is an experienced flipper and thinks they're dealing with a very vanilla fix and flip. It was all penciling out. The numbers were really chunky in terms of profitability. The borrower was getting it for the right price. They were buying it for $325,000 and they were looking to do a $50,000 rehab, and easily the house upon completion was going to be worth north of, say, $550,000, $575,000. In fact, they already had an appraisal in hand suggesting that it was worth $575,000. So there's a lot of meat on the bone. And yet the borrower finds out that they in fact failed the septic inspection. The budget that started out to be $50,000 had just immediately ballooned to $100,000. And the issue is the bank wasn't prepared to fund it. It wasn't contemplated originally. They weren't able to pivot, and the borrower really needed a lender that was logical in the sense that as long as the septic system was replaced, the borrower could tap a great profit in a fix and flip that was relatively basic in that it just needed some minor cosmetics. And I mean minor. It was generally a buff and shine, as I would call it. You needed to redo floors, you needed to paint the inside, and then it needed, your standard kitchen and bath. And it wasn't a big house. So at the end of the day, the budget was very tight. They were able to come into this and move quickly through the flip. So they were going to take advantage of our 0-point program here and go in with a really low rate. I think the borrower was able to qualify for 11.365 and 0. So no points on a quick moving flip. We were looking at it as a perfect opportunity for our program, and yet the septic fails, and so the bank backs away. And here we are basically needing to rescue this borrower and get this loan closed in 2 weeks. That's where hard money is absolutely perfect, is that we're able to pivot, we're able to see the project for what it is. We're not derailed by the need for a septic system as long as the math works and the borrower's experience was there. And in both cases, those boxes were checked. And so we were able to accept the new budget, which now had just been increased from $50,000 to $100,000. So now we were coming in and effectively looking to fund 90% of the purchase, 100% of the new construction budget, which had just doubled. And we were able to do that with no questions asked. And I'll get into the numbers a little bit later on in the video. But the fact of the matter is it was a great project. There was nothing wrong with the project. They were buying it as is, which clearly meant that the seller recognized that there was an opportunity, but it wasn't meant for the typical end buyer, your consumer, because it needed work. And that's immediately a sign of an investment opportunity, right? So simple, right? We know the problem. Borrower was caught off guard by the septic inspection. The budget doubled and the bank couldn't handle it. For whatever reason, they failed, right? So we, as a private lender, as a hard money lender, see it as an opportunity. We know that the buyer pool was eliminated by the existing condition of the house. That made it an investment opportunity, and the borrower was buying it at a great price in its as-is condition, right? And the profitability, the numbers still worked and allowed the borrower to still make a great profit, even though they were increasing the budget by 50 grand or double what it was. But again, we see the opportunity. We know that the borrower is getting it for a great great price. We see the profitability and we're able to step in. Based on the borrower's experience, we're able to look past it and get the deal funded in 8 business days. I mean, we're really quick here at Asset-Based Lending. Jump into a situation where it's already in the process of closing and right the ship and execute and protect the borrower's deposit in the process is priceless as far as I'm concerned. You know, hard money certainly comes with higher rates. If you look at what we are able to do here, it really highlights the power of hard money in that we bring certainty of execution and speed of money to the table that banks simply can't compete with. So let's talk numbers. The borrower was buying the property as is for $325,000, which we know is a great price. The budget had just doubled from $50,000 to $100,000 to account for the septic, and we are going to fund 100% of it. The after repair value came in at $575,000. So we were working with 3 numbers. We have the purchase price of $325,000, we have a $100,000 rehab, and we have a $575,000 ARV. Our total costs are going to be $425,000, which is purchase price plus reno. And so the way that we structured the loan in total was $392,000. We're going to fund 100% of construction, as we talked about, that $100,000. So we're going to fund $292,000 at close, which is 90% plus or minus of the purchase price. And the total loan of $392,000 is equal to over 92% loan to cost. And our LTARV came in just shy of 70%. The numbers worked perfectly for us to fund 100% of the increase of that budget for the septic system and get the deal funded. This wouldn't fly with a traditional bank. The banks don't pivot well. So deals like this are perfect for hard money. You never know what's going to happen in a transaction. No matter how many deals you've done, there's always something that can come up. And with hard money, sometimes you just don't have to worry about the nuances of a particular transaction because you know we're going to close. Because we're logical, we see through these expense increases or budget increases as an opportunity. In this case, it certainly ended up playing out exactly that way. So if a bank tells you no, don't give up. Call me, Mike Chadwick, here at Asset-Based Lending, also the sponsor of the video. We can get deals closed that the banks can't. We've closed loans, countless loans, rescuing deals that make sense, just like this one, from a bank who just simply can't close, leaving their borrowers' deposit on the line. It's happened countless times, but we get it done. We've been doing it for 15 years. We've funded billions in loans time and time again. We get borrowers through difficult transactions. So don't hesitate to reach out. You can find all the information on us in the description. And please subscribe if you like the content, like, and just ask questions. If you've had a situation come up where the bank failed to close on you, leave it in the comments. I'd love to hear how you fixed the problem. I look forward to the next video, guys. Thanks for watching.